All right, guys, this is the one stock that you really only need to have in your portfolio, and it's actually an ETF. It's the Vanguard Total Stock Market ETF, ticker symbol VTI, and it's a pretty affordable stock ETF, only costing $215 per share, and it's really the only thing you need to buy if you're looking for some passive investing. So I have this stock in my portfolio in my long-term Roth IRA, and it's been doing pretty well because it tracks the entire U.S. stock market. So you don't have to do any of the research yourself. You don't have to pick and choose companies, what stocks you should buy. If you don't really know what you're doing, start out with buying shares of VTI. It's basically an ETF, which is a collection of stocks, the entire stock market, but it is weighted a little more towards technology. So there's a lot of bit of growth, and it's really good for people who are starting out to grow their portfolios. So it is a dividend paying ETF as well. So if you reinvest those dividends, you're going to experience those compound interest and make a lot of money in the long term. So let's see what exactly this ETF is, what it's holding, and how much dividends it's paying out. So it is a large blend ETF. Just because it's holding a ton of companies, it's tracking the entire U.S. stock market, as it says here. And it has small cap, mid cap, large cap stocks all inside of it. Of course, it's heavily weighted towards the larger caps, and it's very closely related to the S&P 500 index in terms of performance. Um, as we can see here, a hypothetical growth of $10,000. If you invested $10,000 in 2012, you are going to be making $40,000 in 2022, which is a pretty good return, 400%, with dividends reinvested, mind you. So that's going to be a really good return, and we can really see how just buying and holding this ETF is really going to make you a lot of money in the long term. Imagine what's going to be happening in 40 years from now. You're going to be making a ton and tons of money. You just got to be patient. Just buy, hold this ETF, and continuously add contributions every single month, every single year, whatever your investing strategy is, but continuously add to your holdings, and you'll experience a lot of wealth in the long run. Just be patient. Getting rich quick in the stock market is very hard. So our goal here on this channel is to actually build long-term wealth. And as we can see, heavily weighted by technology inside of this ETF, mostly holding tech companies. As we can see here, the top 10 largest holdings are going to be Apple, Microsoft, Alphabet, which is Google, Amazon, Tesla, Meta, which is Facebook, Nvidia, Berkshire Hathaway, which is Warren Buffett's company. It's also considered like an ETF because it holds a lot of companies inside of it. We also got Johnson Johnson and United Health Group. So pretty good holdings, very, very diversified in my opinion, with consumer discretionary being the second highest. And yeah, we got healthcare, we got industrials, we got financials. A little lacking on the telecoms and real estate and utilities, but that's okay. But overall, this ETF has done really well. As you can see, past 5 years, up 76%, which is a pretty nice return. And even in the past year, it's up 6%. And the average return in the stock market is around 8 to 10% per year, which is pretty sweet. And this is a dividend paying ETF. So if we can take a look at the distributions, we can see it pays out every 3 months, quarterly dividend. And the dividend yield is going to be roughly around 70 cents, 70, 80 cents per share. So if you have 100 shares of this ETF, you're going to be making 80 to $70 every 3 months, mind you. So this ETF does have a yield of around 1.28%, which is annual, and then split up between 4 quarters. So make sure you're reinvesting those dividends, and that's really going to help accelerate your growth, create that compound interest, and make you a lot of money in the long term. And this is really the only ETF you need if you are new to the stock market, if you don't have time to monitor the stock market, especially, and you don't want to spend time doing research on all these companies. So that's about it. Thanks for watching.